Good morning, everybody. This is Market Michael. We are in April 18th, 2018. It's 7:58 in the morning. Now, we got some economic data that came out in the morning at 7 o'clock. So let's go ahead and cover that. Now, the MBA mortgage index is I had to look this one up, guys, because this was, I said, why did we get an increase? Well, let me try and understand this so I could see what's going on here. So the MBA index is an indication of pretty much people's ability to buy and sell houses. Now, so we should be the most housing market activity occurs from the spring through the fall. So we are like we are launching up so that this housing market is going to rise slightly. So that's what we're seeing. We're seeing these natural levels, these natural cycles start to accelerate. The relationship between the activity levels shown by the index and expected levels for the time of the year tells analysts about the strength or weakness of the housing markets. So let's go ahead and look at, can we get a chart? Q4 17. So, well, we see this. Oh, what the hell is this? This doesn't really help. Maybe, yeah, it does. 4.9, previous 1.9. Yep, 4.9. 4.9%. This is kind of weird. Now, this is a very strong number. Uh, I don't know where this came from. U.S. mortgage activity flat as loan rates fall. Yeah, the only reason why loan rates are falling is because the Fed is propping the bond market up. Rates have continued to gone down, even though the Fed is still raising rates. Doesn't really make sense, does it? And looks like we're going to continue to see a fall in bond yields because of the massive propping up of the bond market. Now, if we just start to have a downtrend in the stock market for whatever reason, then that's going to affect it, and more people are going to want to buy bonds. Even though they're going to have to prop up the market, it is not going to, you know, it is not going to, kill everyone. March, can we see more? Let's look at 2017. Let's see what the number for 2017 was. April 18th. So here we go. Last April 18th, we were negative 1.8%. And then April 26th, we were 2.7. Yeah, but these numbers are all over the place. So this doesn't really help. Yeah, it's too inconsistent. This is too inconsistent for us to draw conclusions, guys. It is a good number, very good number. I don't know if it's going to really, the only reason why people are able to do that is because the bond yields are being manipulated. Okay, let's back off of this. And let's talk about futures. The futures are interesting. We had a spike off here in the what's it called? S&P. But overall, I'm going to pull up daily charts because I was predicting an eventual pullback So we're not even overbought, and we are at the top of this movement range. So it all depends, because if we happen to get a two-legged move, it is more likely for the stock market to go above these these levels here, these zero levels, which indicate bull or bearish momentum. So when you have when we dip down, I'm teaching you indicators, guys. I'm teaching you the likelihood and what to look for. So we are looking at the CCI, and we are examining its relationship with the move and with stock strength. So what in any indicator, you're looking at the bottom and you're looking at the top. These are the two ranges where it's like you flip a switch. You're at the bottom and now you flip the switch and now you're going up. So we are at the top, so the switch is going to be flipped rather soon. I mean, we still could peak out and pop above, but it's still going to be flipped. We're at the top of the range, right? Okay, so we flipped that. Now, here's the thing. But look what happened here. You see, we peaked out and we were going to fall, but we ended up gaining and doing a second bull run to get new highs. So we are now testing these highs. I suspect that we will. If this is a head and shoulders pattern. You see it? Shoulder, head, shoulder. Even though it's not pretty, it's you could make that conclusion. But let's go ahead and talk about this. So now, if we do happen to pull back in strength, we're going to still be on a trajectory that passes that trend line. Now, we could even go over the trend line and come down it like this, which is what's likely going to happen. But actually, well, if we get it all depends. If it's not strong enough to make a bull run and stay on top, it's going to kind of look like this, because it's going to try and get above that zero line. But at the same token, if it's strong enough, it will just live on the top, and that's that, and it'll be on the top ranges of this CCI, CCI or tricks rather, and MACD 0 point. Okay, so but the RSI is relatively low. We're actually weaker than previous spikes here. So what does that tell me? That tells me we're weak. That we're at the top of a range. We are still below that tricks and MACD 0 point, and we have you know we have weakening bullish buying. So look here. Look what happened when we had weakening bullish buying. You see this? Weakening bullish buying. Boom. Started this downtrend. What do we got here? Weakening bullish buying. And we have weakening selling, which is bullish. So basically what we're looking for in the next couple of days is what the market is going to do. Are we going to pull back and get a two-leg move, or are we going to continue and just do one bull move and retrace to do a bear move? Now that is also a possibility, in which the first move I was first predicting that we would do a double ditzer, but the strength of this is very strong. So usually if it's weak, it'll do a double dance. But in my opinion, it doesn't seem like it's too weak. It's pretty strong and it's accelerating. Or it did accelerate. We had acceleration, this move up, slow move up, acceleration, and this is pretty. We're gonna have an accelerated day today. That's gonna be the top. Not too accelerated. I expect to stay in these ranges. If we happen to not stay in the ranges, so be it. But that's what I'm looking at, and this is what I'm seeing. Now, you could start to even look on an hour chart. You know what? I wish I could do a longer time frame. Let me see if I can add time frame. Oh, this is, yeah, let's just do, no, there we go. 4 hours. Let's do 4 hours. Just curious. I've never done this. I see someone had it. Let me customize this so we already have a 10-day 1 minute. No, we don't, do we? 10-day 1 minute. Oh, we have a 1 day 10 minute. That's what we want. So let's delete this 10-day 1 minute. 1 day 10 minute. Excellent. Apply. Okay. Great. So hopefully, yes, 4 hour. Great. I never knew this, but this 4 hour works great because it shows you kind of the length of time we need, as well as the like shortness of it. So we are at the top in this RSI. We are coming down with the CCI. That's telling me that this run is particularly over. Now this, you could clearly see the MACD and Trix both grew on the top ranges. So relatively, this move is bullish and strong for the most part. And it displayed different characteristics than here. But I would still assume that we have not made, we need to test the high. So if this is all this can do, there's no way this is gonna work. But if we so if this doesn't work, right, and we go back down, that means we're testing support. And when we test the support, it depends on how low we go. If we get higher lows, that's a bullish indication, and I would say then the indicators would slightly reset and we're on to the next move. But look here, we haven't had a single bearish pullback on this 4 hour chart. It's been complete bull trend, and you could see it absolutely followed this trend line. And now we're popping off to the top of the ranges here. So this tells me that we are at the top, not yet peaked. I mean, we're pretty peaked, but we're not at the point. We're almost at the boiling point, guys. We're decreasing MACD histogram. We're coming down with this CCI. RSI is still strong because we're up there. So it all depends on a series of factors and what happens. Now, let's just get into gold, Bitcoin, and treasuries. You know what? We'll do treasuries. We'll do treasuries and dollar. The Dixie, ladies and gents. Okay, so focus your attention to the two left side of the charts, or these two charts here. Okay, so the Dixie on a daily looks like we're coming down here. We're coming down, we're going to fail it. We made lower highs, so we're going to be in this downtrend pattern. The Fed is just buying bonds, or, at least Money GPS did a video today saying, guess what country's buying our bonds? So I guess there's a buyer out there who's buying the bonds besides the Fed. Interesting, huh? Well, here we go. I just ruined the chart here. Let's look at a monthly chart for the dollar. The dollar looks almost like it's bottomed out, but I think we could continue to go past the zero marker and absolutely get in the absolute lows, historical lows. We're at the bottom of the range here. I mean, this just looks awful. We are going to come down and continue a downtrend. I don't know. This does not look good for the dollar. Look at how weak it is. absolutely very weak. We kind of double bottomed here, tried to make a move up, but we are coming back down. CCI spiked up too much. You can see we're coming back down, and we're going to have to test this 88.9 handle. Now, we're coming back down here, and we're going to test the 79.10 or 79 period level. This 27. What the fuck's wrong with me? 27, guys. Gonna have to come down test this. So what's this mean? This means if interest rates are falling, that means there is there's a massive amount of buying going on. So if the stock market's great, right? All these earnings are coming out fantastic. Everyone's gonna have the biggest portfolios of their life, you know. But wait, how come people are buying treasuries then, huh? If the environment is so like if the environment is encouraging risk taking, how come people are locking their money up in a 10-year yield for 2.8% when they could be in the stock market? Doesn't make sense. It doesn't add up. Doesn't add up, guys. Okay, let's go ahead. Gold, Bitcoin, or Bitcoin gold in that order. You know what? And we'll do silver. Why not? We're just taking a look at these general markets because you know it's good to look at this. So I mean, although this is a bad candle right now, you know we still have the potential to get another spike up. Now that's kind of interesting. You know, we get another spike up, we'll touch this resistance. You know, we could even just get close to that 9,000 mark. You know, just headbang it. But at least this point, we've bottomed. We haven't bottomed, but we've established that we've got a little bit of support here. But this almost looks like the stock market. You know, we bounced, we went up, made a higher high or a lower high, whatever, and then just trended down. We tried to go, and now the stock market too is kind of, you know. But look here, we are like in a wedge. We're starting to get in this in a bad looking pattern with this. So look at here, huge spikes. I mean, it looks like we want to curl, but will we is the question. I don't think so. I think we're just going to stay in this 16, 17 range, maybe even 15 to 18 range for a long time until we actually start to get a breakout. Because look, we're just floating on this level. So I don't know how, they say it's manipulated. Look at gold here. Gold's had a pretty solid run, but looks like the run's overdone in my opinion. You know, we could go up today, but we're gonna be spiked out, and unless we can hold there at the highs, then I don't know what's going on. You know, we're not spiked out. We still only got a little bit, so I think it's possible that we'll get a lower low. Like we'll get a lower low here. You know, we'll get a lower low. We'll probably pop up maybe 1358, get a lower low, and then we'll reset. But who knows what could happen with gold here? You know, this is a pretty big freaking bar, so, but it's a pretty big spike. Oh, baby. That's that, ladies and gents. Alright, anything else I could say? Well, we got a 20-minute video. We're just waiting for the open, waiting for this news to come out. At 10:30 we get crude inventories, and at 2 o'clock we get beige book. So maybe I'll do a crude special at 10:30 or 11. That's what I'll do. I'll do a crude special, and we'll do a special look at in oil and crude inventories. Alright, and not only inventories, but what does this mean for the economy, and what does this mean for oil and crude in general? So, and at 2 o'clock, we'll do a special on the beige book. So thank you very much, guys. I hope you have a wonderful day. You know, keep your eyes trading. I suspect today will be relatively flat. This was a jammed-packed episode of charting, of thinking logically, of doing all sorts of fun things that, you know, what just that what we went over. I'm pulling up the futures once again here. Well, this month chart actually shows. This month chart doesn't look bad. It doesn't look horrible. The indicators don't. They look like they're resetting, but it's not like, and this weekly chart looks good. This weekly chart shows a recovery. But the long-term charts like this aren't going to show you what's actually happened. Because look, we're backing down right now. We made lower highs. Look, we made a higher high. But look, the Dow is always the weakest. That's not a good sign that you have a lagger, you know? I don't see this market going anywhere. I think we're going to stay in these ranges, you know. We stay in these ranges, and that's going to set up for a big down negative day. Today's what? Today's Wednesday, so Thursday, and then Friday's always shot. So we're looking at a, pretty bad week. The setup for the week. Although we are up, we are looking for a pullback. We are at the top of the ranges. So I hope I made myself clear with saying everything like that. I hope you guys get my points. I hope, I really wish that we could have a classical libertarian government who respects our liberties, respects the money, respects people around the world. What's going on in Syria is a disaster. You know, I could say for a fact the U.S. government does not know if, well, the insiders know, but the chemical attack Assad supposedly did on its people, there's no proof. There's absolutely no proof that that Assad did it. They don't even have proof that it happened. You know, who knows? But the airstrikes against Assad, you know, he 70 missiles were intercepted. If I'm not mistaken, that's a lot of missiles. So that's crazy. But the whole point of this was that it's fucked up. Where they're just trying to get oil pipelines, and they're telling the public it's about a humanitarian crisis. It's absolutely not about a humanitarian crisis. It's 100% about pipelines. So our politicians are gonna lie to us face value and tell us, oh, it's Assad has to go, regime change, it's because we need to spread democracy. That's absolutely not true. And we've experienced this war after war. They lied to us in Iraq. They lied to us when we went to Afghanistan. They lied to us when we went to Vietnam. They lied. They just continue to lie and to push propaganda to, achieve the elites, um, bidding. It's absolutely not right. Absolutely not right. You know, and it's not right for them to do this to us. So as much lies as they have about that bullshit, it's that much. It's the same thing when it comes to our economy, when it comes to the stock market, when it comes to everything. It's all lies. It's all manipulation for people to just keep their heads down and say yes to the corporate dictatorship. And it goes beyond a corporate dictatorship because the dictators control what corporations get their spots. That's why it's crony capitalism, and that's why we don't have free markets, because governments decide who gets what, when, where. That's not fair. That's not free markets. If the people really were to decide, we would be in a better direction. I think unilaterally across the board, everyone would want clean energy. It only makes sense. We would want cars that could run on fuels that, are okay, because I don't think people want electric cars. And even so, the technology behind them isn't developed yet to make them light and efficient. Right now, they're heavy and they're absolutely annoying to charge. That's why there's only like one major electronic car company manufacturer, Tesla. So, the free markets would want these better fuels. Like, they would want, you know, so it would make it worth it. But you have corporations that are backed by the government, like you have oil, big pharma, backed by the government, subsidizing this crap, that make it, that legally block out new ways of thinking. So how can we ever advance in a society? We are advancing, but in a way that's not beneficial. We're doing damage to the earth. We're doing damage to our society. We're doing damage to the people by having a welfare state, which is just creating more poverty, because it's people see it. Why work when I could just live off the government? You know, I don't want the 50s. People didn't want free handouts, but it was so bad that they needed them, and it just became, everyone got used to it. So to getting these free handouts, and no matter what, whether it's through school, whether it's through the loans, which is school, like these, like, governments subsidize everything. They're putting everything on a credit card for when I'm older. That's not the way to do it. If you guys were out to go buy a car, and yeah, okay, you could do that. Just put it on a credit card. But I wouldn't do that. If I were to buy something, I would make sure I would have a solid amount of money, to pay for it, and then have little down payments to pay off, or create a plan to pay it off. But we have no plans of stopping. These Keynesians took over because they allowed this whole system to run. The government can, promise something for nothing, and it just it's escalating to a point where there's no return. There's no return. One of the traders on CNBC like 2 years ago said, why is the Fed hitting the brakes? Why is the Fed tapping on the brakes? Meaning, why aren't they printing more money? Why aren't they printing more money? Keep the money coming in. Absolutely. What? That is just absolute wrong thinking. We're at a 30-minute video, guys. This video is filled with my knowledge, filled with technical analysis, filled with real-world information. Now, you guys fucking better listen up, better enjoy this video, like and subscribe. Again, I'll make a video 10:30 and 2 o'clock. We're talking about crude invents at 10:30, well, a little after, and beige books a little after too. So thank you very much, guys. I'll see you soon. Have a wonderful day, and enjoy the trade, and take care.